And good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's January the 20th. It's a Thursday. It was a slightly frosty start this morning. Here we are. We're back on the weather again, aren't we, Paul?
Yeah, it sounds like it.
Actually, let's move
nice.
straight. Yeah, look, it's going to be a lovely sunny day as well. Talking of lovely sunny days and everything looking rosy, looks like nickel's just hit a new high.
Yes, that's right. The China Shanghai futures quote hit 175,000 won, which is over $27,500 US a ton, and that was up 6.6% over the 250 time GMT. The London quote came in at $23,535 a ton, which is the highest price since 2011. Inventories in warehouses just 4,700 tons on the Shanghai Exchange, which is near a record low, and also the LME is near record lows too here, with the 2-year number low hit at 94,800. One of the key things to see just how much bid demand is in the market is the premium or discount over cash quotes on the 3-month contract, and that's at $330 a ton right now, and that's up there in decade high levels here in the last several days for sure. So very much in demand nickel at the point.
And what would you buy? Horizonte off the back of that, or have you got any other favorites there, Paul?
Yes, I would say Horizonte is a very good place to be playing that right now, but also some of the nickel sulfide developers as well. Blackstone, for instance, in Vietnam is one to play on the ASX, for instance.
Okay, interesting. I mean, it's interesting. Commodity prices actually are remaining strong. I mean, we've seen tin now on the LME, it's at about 42,000, but I'm told out in Shanghai it's trading near 50. And so tin is still, driving forward. We actually obviously saw overnight quite a nice move in gold up to 1840 when I last looked, up from sort of 1800. So that's starting to tick up. A lot of people saying it could just go and breach the 2000s. Silver, we got up at 24. I must admit, my feeling is silver is going to go up to at least 30. And actually, equity prices aren't necessarily following commodity prices, so there could be a bit of a squeeze on a few equity mining companies, and people also forget, even at the levels we're at the moment, Paul, these companies can make an awful lot of money, can't they?
They sure can, and I would have to say too that these bid prices we're seeing in the Chinese markets sure aren't showing that there's a real slowdown going. At least as far as the fabrication is concerned, because they're definitely trying to pull inventory into China for the year 2022 for sure, I would say.
Well, I would actually argue the opposite, not slow down. They're actually going to accelerate up, particularly these sort of critical and battery metals, because demand for moving in the transition energy space is growing so rapidly. So hold on to your horses, tighten your seatbelts. We could be off for another run. Anyway, let's turn to news this morning, Paul, if we may. Probably start off with Hochschild and Resolute Mining, I think, are the two probably big ones to talk about.
Yes, both of those with fourth quarter and full year results in production being released. Starting first with Resolute Mining, it's an improved picture there with Resolute, with quarterly gold production at just shy of 80,000 ounces for a 5% increase quarter on quarter. Full year came in at 319,000 ounces, which is at the low end, but within the range of guidance that they had given the last time. All-in sustaining costs were better by 4% at $1,437 an ounce for the quarter and $1,370 for the year. And that's just outside the guidance range that they were hoping to hit on the top side here for the year. The gold sales were at a realized price this quarter of $1,749 an ounce. And that's about $50 lower than the spot price average due to some hedging that they had in place. Their guidance for 2022 is about 345,000 ounces, so they're going to be improving their production here, they feel, with some improvements that they have coming in to commissioning this quarter at the Syama mine. So it's an improving picture, but they have met several more quarters before they'll convince investors they're really on the good course. For Hochschild, we had full year production results with total cash retained at the 31 December of $387 million, which is quite up from $232 million at the end of 2020. All-in sustaining costs, they think, will be within the guidance range of $12.10 to $12.50 per gold equivalent ounce. They expect to have increase of about 83 million silver equivalent ounces in resources for this year, which means the mine life is being extended. And attributable production for the full year came in at 222,000 ounces gold, 12.5 million ounces of silver. And the guidance for next year is for much better gold equivalent, or a little bit lower gold equivalent ounces production, somewhere below 345,000 ounces gold equivalent. And all-in sustaining costs also a little bit disappointing here that they're expecting at this point, I would say. So it's a steady outlook for Hochschild in my view, but nothing stellar.
The action tends to be in the smaller companies. But a couple of things that on the dual listing front, I noticed that Vulcan Energy, which is a company we think is exceptionally well run, it's a lithium developer in Germany, has gone and got a Frankfurt dual listing. Missed a trick there. What they should have done is got an Aquis dual listing, because then it opened up the entire London market to them. Frankfurt won't. If you're listening, Vulcan Energy, come and talk to us. We can do it very, very cheaply, and it will give you a significant advantage. And also, I noticed that Brada Head Lithium, which is on AIM, has decided to go and get an OTC quote. Whether that'll work or not, we've done a lot of work looking at OTCs, and unless you've got an incredibly strong US retail following, I'm again not quite sure how much that helps, but time will tell. Anything else, Paul? Because we talked for a little while now.
Alta Strategies, the AIM quoted project generator and royalty company for Africa, they've consolidated some ownership projects in Mali, and what this has specifically done is it brings two projects that had divided ownership all under the head of Altus here, but because the projects are only 5 kilometers from each other and with existing resources, it'll allow the projects to be considered as one future development opportunity.
Okay, that'll do, Paul. We'll call it a day there, and we'll speak again tomorrow.
Very good. See you then.